I'm buying my next investment property and I'm taking you on the ride with me. Part one, let's get pre-approval. So before you put any offers in, before you even start looking for houses, let's get pre-approval. Reason for this, one, so we know what your budget looks like. Two, whenever you submit an offer for a property, if you give a pre-approval letter with that offer, it not only strengthens your offer, but also the listing agent might ask for one to make sure that you are approved up to the amount that you are promising. So some of the lending options that we're going to go over today, some of the loans that we're going to go over today are very general. If you want true specifics, go to a loan professional. We're just going to cover some very common loan types. So you're going to base your loan off what strategy you're going to use. If you're going to live in the property, then you got a lower down payment. So 3.5 or 5%, depending on what loan type you use. If you're not going to be living in it, it's just going to be an investment property, it's more like 20 to 25%. So your first loan option is an FHA loan. Most people think this is a first-time homebuyers loan. It's not exclusive to first-time homebuyers. It is a useful tool for first-time homebuyers though, because it's a lower down payment, slightly higher interest rate because of that lower down payment, but it means you don't have to bring as much money to closing. With this, it's government backed, meaning that there is stricter guidelines for the inspection, so it has to pass a higher standard for inspection versus a conventional loan. So if you can get a home that is in good enough shape to pass an FHA inspection and you don't want to put that much money down, this is a great option for you. We then have a conventional loan, which is 5% down typically, a little lower interest rate than the FHA, and you can get away with a little bit more on the inspection. So both of those first two options, those are for if you're going to live in the property, if it's going to be your primary residence. Our next ones are investment loans, so 20% or 25% down. So 20% is typically for a single family, 25% for multifamily. So if you're getting a duplex, triplex, quadplex. With the investment loans, these can be very useful, especially if you already have other properties and your DTI, your debt to income, isn't in a great place on paper, even though it's fine in reality, because you can use what's called a DSCR loan. A DSCR loan basically takes whatever the income of the property is, and that it uses that to qualify you instead of using your income. So the short of it is, figure out what your strategy is going to be. Are you going to live in the property or are you not? For me personally, I'm going to live in whatever property I choose, and then I'm going to get one that's a little worse for wear. So I'm going to do the 5% down. I'm not going to get something that would pass an FHA inspection. And then get with a loan officer to get pre-approval for an amount, hopefully that you want, or at least what they see fit. From there, we can then start narrowing down what houses we're looking at.